right, welcome back to episode 18 of the Cashflow Corner with myself, Aaron Thomas, along with my brother Jacob Thomas. Excited to be back. Jacob, how you doing?
Yeah, I'm doing great. It's nice to get back in the podcast studio here with you and get some content out to our investors and our listeners. So couldn't be more excited to finally get back in the booth here with you. And I know we have some good content planned for today, and I can't wait to really just jump right into it. I guess before we do that, is there anything you want to catch our listeners up on your life, the business aspect of things? Is there anything you think people should know right now?
Yeah, I definitely think we should mention that we've been pretty busy with these past deals that we've been doing, and we actually may have another deal upcoming here pretty soon. So excited to get that out to our investors. With also just talking to a lot of different people in the commercial real estate world of really what's going on in the market, what we're seeing, what they're seeing. So having a lot of those conversations, which have been great, and ultimately just helping build relationships with everyone in the commercial real estate world. So from that aspect, it's something to really be excited for. And other than that, just couldn't be more happy to be on the podcast with you here today. How about yourself?
Yeah, everything's going well. Can't complain a whole lot. Yeah, like you said, going back to those first two deals, we actually have distributions scheduled to come out here soon on that North Edge deal with ASIM Capital. So we're excited to finally get some capital back in our investors' pockets, which is always a good thing. So looking forward to that, as that's going to be our first time really going through everything that that entails. So looking forward to that. But like you said, we were recently in Austin, Texas. What was that? Probably 2 weeks ago.
Yep.
Meeting with the Lone Star Capital Group guys. If you're not familiar with them, I highly suggest that you do, because there's some things that are on the horizon with Twin Lux Capital and Lone Star Capital, as we plan to partner up on a deal here in the near future. So we're looking forward to that. But really, my main takeaway from that mastermind conference group that we went to in Austin, Texas, learned a lot from just being in the room with other fund managers, other general partners, and just being able to sit down at the table with some of those folks. Really learned a lot from them, and took some things that we learned there, and now we're going to put it into our practice and really start to see how things pan out from what we learned there. Kind of goes back to that saying of, when you think about the NFL, people call it a copycat league is kind of what they say. And that's honestly what it comes down to in real estate when you're looking at syndication projects, is being able to go to those people that have, done deals from, 5, 10 years, whatever that expertise looks like, and just being able to replicate and repeat that process over and over. So that was really one of my big takeaways. And I think that's kind of segues into what we want to talk about on today's podcast, of questions that investors should be asking syndicators, general partners, when they want to bring capital to the table. So for you, Aaron, what are kind of some of those common questions that come up from investors? I guess we can just dive right into what we want to talk about today. Feel free to kind of take it wherever you want from there.
Yeah, I think what you said was perfect. And ultimately, whenever an investor is investing in a deal, ultimately just making sure you feel comfortable with that deal, you know really what the entire outline is, what's going on with that, and you get a full understanding of the basis of the deal. And for this episode, like you said, it's just going to be 5 questions that every investor should ask a syndicator before investing, ultimately just to help those passive investors vet multifamily syndicators and vet those deals to avoid common mistakes by equipping them with the essential due diligence questions. And we're really going to break down each one and why each one matters. And going right into it, I would say the first question that any passive investor should ask is, can you walk me through your track record, or what's your track record? Just to really understand what this sponsor or syndicator has done in the past, what their past performance looks like. But I mean, past performance isn't everything, but it is a strong indicator of experience and reliability. And ultimately, what you want to hear is the number of deals done, the full exit cycles, what the return were compared to their projections, and ultimately the lessons that they learned through those deals. So just to get a better understanding of the person that you're ultimately investing in as well, because you want to show that they've done this before and what they've said in one part is what they've finished on another, of ultimately saying, hey, we've done this before. This is the returns that we were projected. And ultimately you want to hear that we exceeded those projections and exceeded those expectations. Because especially in this business, you always want to underdeliver and overperform to gain those investors' trust and have them be repeat investors throughout their career. So I would say that's the first big question. And ultimately, you just want to make sure that whoever you're talking with, either it be a sponsor or syndicator, that they're trustworthy, transparent, and honest with you, because that is what matters most throughout the life cycle of a deal.
Yeah, I love that. And I'll just kind of back it up as we're going through these questions, Aaron. Obviously, we're going to put ourselves, I guess we'll put our investor hat, our LP hats on here for a minute. And this is something that we have direct experience as we've been LPs in prior deals, but also at the same time too, when coming from a fund manager's aspect, we're doing the same due diligence and we're asking the same questions when we're vetting and sourcing these deals with these partners. So when you think about it that way, we have a lot of, I would say, a lot of experience when it comes to asking these questions, things to note. So just know that we're really going to try to put ourselves in our shoes as we kind of talk about these questions and things for our listeners to look out for. And going back to the track record thing, like you said, it's not everything, but obviously it's a crucial aspect of, how a deal might perform. And now I want to transition into our second question, which comes up a lot, and it's something that LPs should be conscious of or aware of, is how do the syndicators communicate with the investors? And the reason I asked this question is for, a couple different reasons. And what it does is just from off the jump and off the rip, communication is going to build that trust and keep the investors informed throughout the whole process. And this is something where you want to establish this from your first call, from your onboarding call. And this is something that, Aaron and I are working with as we're sending out distributions to our investors on these past deals. And we just really want to keep on top of how the deal is performing at the moment, what the distribution schedule is looking like, just being on top of the current deal, along with any other future deals that might be in the pipeline as well. And honestly, what you want to listen for and things to pick up on, when you're talking to the general partner, fund to fund managers, whoever you are investing your capital with, is you want to pay attention to the frequency. How much are they touching base with you? Is it once a month, once a quarter? And that's just something where you're going to have to be able to establish that. It comes back to what I'd already said, but it comes back to being able to establish that from the jump. And honestly, you're going to be able to communicate through, let's say, different webinars, different emails that are going out through your portal, etc. There's going to be a lot of ways to make sure that you feel involved and that you're on top of what your investment is looking like.
Yeah, exactly. And I totally agree with you. And maybe just one more point on that is, just want to stay up to date of what's going on with the deal, what they're doing differently, what the strategy in place or the system in place, how those are performing. And like you said, of just being in that constant communication and constant contact really builds that trust. And I would say the only red flag there would be maybe vague answers or lack of a system in place for that contact, because ultimately it's your money. You're the one putting it in the deal. You're investing that capital. You want to know what's going on day in and day out. So having that communication on a consistent basis is a huge thing to note whenever you are investing capital into a deal with either a sponsor or fund of fund manager or really anyone, just to be able to, know that your investment is working for you and hopefully that it's going the way that you expected it to go. And then from there, I think we can jump to the next question, which is asking the sponsor of how do you personally invest in your deals? Because I know we've mentioned it in prior podcasts, but to ultimately say, hey, our interests are aligned. the syndicator and the sponsor also have skin in the game, and shows that they're investing right alongside of you, and they have just as much, if not more, involved and interested in this deal than you, because you want to just know that the sponsor isn't just out there throwing these deals to investors, and then once the deal is up and running or once the deal is closed, that they're just kind of sitting back. You want to know that the sponsor is investing alongside of you, that they're going to make sure that the deal is going to perform as best as it can, so their investment performs the best it can as well. And ultimately, what you want to listen for is that that sponsor has that co-investment, like I mentioned, that they have that personal capital at risk. So they are working as hard as they can and putting everything they have into this deal to make it perform as best as possible, so that the returns are the greatest as possible, not only for you, but for the sponsor as well. And then I would say the only red flag there that you wouldn't want to hear is that there is no personal investment, or maybe a vague commitment to the deal. You want to know they got skin in the game. They're going to be right alongside you throughout the entire life cycle of the deal, and their money's at risk too. So they want it to perform as best as possible. So I think that's another huge question to ask as well.
Yeah, no, it definitely is. And it always comes back to, and I don't want to keep reharping or reiterating on this, but it's so crucial that everyone's interests are aligned. And it only helps further, emphasize that when the general partner or the fund to fund manager has skin in the game, that only really helps, align those interests with everyone across the board. So I love that. Made a lot of good points there. And I want to move on to our next question is, what's your business plan for this property? This is something you should be asking the syndicator, because honestly, a lot of syndicators, or I don't want to, make this claim that a lot of syndicators just kind of go off pro forma and they kind of expect the property to run at a certain rate, and those are the numbers. It's a lot more in depth. There's a lot more strategies that go involved, and there's a lot of things that entail the business plan. So this is something you want to ask the syndicator, just to be clear of understanding the deal strategy. Is it a value add? Is it a stabilized asset? Are you repositioning this asset? And this all goes back to, just being able to align your risk tolerance with, the property or the deal that is out there, just being able to identify what the risk is and how that aligns with, the business plan and what that best practice is to move forward. And really from here, you want to be able to establish some clear plans with timelines. If it's a value add, you want to be able to identify, what does this renovation process look like? Is it going to be 24 months? Is it going to be 36 months? Because this is really going to play into getting those units up to market rent, or, hopefully beyond market rent. And from there, that's just going to be able to tell how the cash flow is going to progress from month one to, call it, like I said, maybe month 24, month 36. So being able to identify that, along with having, a clear idea of what the rent growth is looking like in that market, that's always key. And that's always something you want to keep an eye on as well. And some red flags or some things to kind of keep in mind is when you're looking at the business plan, it goes back to that idea of, where are their assumptions coming from? Where are they building this plan from? And you want to be able to take a deeper dive into that business plan, because a lot of deals that we've come across, Aaron, and, we can speak on this personally, there could be some crazy assumptions that they're building in, and there's really no data or anything to back it up. And that's honestly a huge red flag right off the rip. Something that I would be mindful for. You want to be able to come to a business plan. You want to have conservative assumptions. Like, let's take our first deal for an example. The way they underwrote it was so conservative, it made me feel really good, because I'm always somebody that, when we're underwriting, I always kind of underwrite things conservative, or I would say worst case scenario. That way you kind of have an idea of, hey, if this property performs, worse than what we thought, then you're going to be able to have somewhat of an idea of what those returns might look like if that case does arise. But other than that, I want to, this kind of segues into our next question here, Aaron, if you want to hop on that one.
Yeah, no, I completely agree. And like you mentioned, it's huge that whenever you're going through a deal and you're understanding the business plan, the more conservative, the better, because you want to assume those worst case scenarios just to have yourself be a little more self conscious of what could happen. And ultimately, if you set yourself up for the worst case scenario and the best case scenario happens, it's almost the same thing that I mentioned prior of under promise, over deliver. So whenever you're going through that, I mean, if you're seeing crazy assumptions of people being overly optimistic with plans, maybe just sticking to the pro forma and they think that that pro forma is going to hit, pro forma never really hits. So you want to just make sure that you're understanding where they're getting the numbers, how they're getting their numbers, because you just want to make sure that this investment is the best fit for you and is the best deal really out there and possible that you can get in right now, which really it all ties into our next question, like you mentioned, of what happens if the deal doesn't go as planned. And why you want to ask this is real estate carries risk. It's just a part of the game. But as a good operator, that operator or sponsor will plan for certain contingencies of, like we mentioned in our first deal, being very conservative underwriting, of actually underwriting it worse than the property was currently performing of that worst case scenario. And if you're underwriting it at worst case scenario before you even take hold of the property, then it only sets you up further in the long run. And ultimately what you want to hear for, or what to listen for whenever you ask this question, is that they do have backup plans or reserves or sensitivity analysis. Ultimately, that leads to investor protection, because it almost goes into all these questions tying together into this question of, hey, maybe I've done a deal prior to this and maybe something went wrong, but this is what we did to overcome that, and ultimately show that things do happen, but there is a way to overcome certain challenges that come out through the life cycle of a deal. So just hearing that from the sponsor or from the syndicator is a great place to really make yourself feel more comfortable in the deal. And then I would say the red flag for that question is, oh, that won't happen, or just lack of stress testing, or the attitude of saying, oh, that would never happen, of someone that underwrites, goes through the full due diligence, can understand what could happen, what's the worst case scenario, what would we do to get out of that, and having that strategy breakdown for every little piece of the puzzle of knowing what could go wrong, what would I do, and ultimately knowing your way out of it. Because, I mean, things come up through every deal, could be small, could be big, but ultimately having that sponsor that has that expertise is crucial throughout the life cycle of a deal. And really, all these questions do tie in together. But whenever you ask these sponsors these 5 questions, you'll get a better understanding of the sponsor themselves, the deal itself, and ultimately, if this is someone that you want to work with for the next 3, 5, however many years throughout the life cycle of a deal, or even do other future deals with them throughout that. So, whenever you are going through these questions, make sure to write them down and compare them to what other sponsors say and what other deals are out there, because you want to really accumulate as much knowledge as you can and then break it down from there, and ultimately just trust your gut and trust who you have trust in, because that's ultimately what's going to lead to a successful deal, is that trust and transparency of that syndicator or sponsor through the life cycle of the deal. And I would recommend all listeners, if you just want to maybe follow up a little bit more on this, or you want these questions, download our free ebook at twinluxcapital.com that has these questions. And it really helps you run through the entire life cycle of the deal, and maybe what questions to ask, what I should be looking for, how it all really breaks down. I would recommend going to our website at twinluxcapital.com and downloading that free ebook, because that'll only help you gain more confidence and trust as well of going into a real estate syndication deal.
Yeah, no doubt. And, I just want to, help summarize this. And after you, let's say you ask all these questions, you sit down, have a nice talk with whoever you're speaking with. Let's say maybe you're still a little uncomfortable, unsure, really not sure how you're feeling. One thing I would highly suggest, and I think this is a great way to really take a deeper dive into this, is oftentimes these syndicators, these general partners, they will have investor meetups. And that's a great way to get in the room with prior investors who have been there in the past with, that syndicator or whoever that is. And that's a really good opportunity to sit down, have conversations with those people, learn a little more about their testimonies, how they have personally seen benefits from that syndicator. So I feel like, that's a really good way to reinforce if there is still any doubt there. Just get in the room with those people, and then you're going to have a really good understanding of exactly what you're getting into from there.
Yeah, no, I think that's a great idea as well because I mean you're able to come face to face with the sponsor, talk to them, get a better grasp of them. But then, like you mentioned, with those past investors, you can see what their experience was like through their past deal and just gain that better understanding. So that's a great point as well. And then again, if you have any questions or anything like that, always feel free to reach out to myself or Jacob. Our emails are at our website at twinluxcapital.com. We're more than welcome to help anyone really walk through any point of the real estate syndication process because we're doing this every day. And I know we've mentioned a good amount, but we're asking these questions and then we're asking even harder, deeper questions as well to the sponsor. We're really getting in the weeds because ultimately for us, we want to bring our investors the best deal possible, and we're diving in as much as we can. We're digging through the deal. Ultimately, we want to dig through the deal as much as we can to try to find something wrong, and ultimately we just want to find the best possible deal out there for our investors every time we're looking. So if that's something you're interested in, reach out to us, email us. We're more than happy to help. And with that, I think that was a great episode for today. I'm not sure if you have anything else you would like to say, Jacob.
No, I just want to thank everyone for tuning in for this episode. Hopefully you guys got a lot of good knowledge and a lot of education out of this. And if, like you said, if there's anything that Aaron and I can help with, we're always happy to do that. But other than that, we'll catch you guys on the next episode.